Intro. Options trading can be a lucrative endeavor, but it's not without its pitfalls. Today we're going to delve into the world of options trading mistakes, learning how to navigate the choppy waters of the market without falling into common traps. Have you ever wondered what separates successful options traders from the rest? Let's find out. Main content: overleveraging and risk management. Not understanding Greeks. Emotions versus rationality in trading options. Overleveraging can be a tempting strategy, but it often leads to devastating losses. It's crucial to understand the concept of risk management and avoid putting all your eggs in one basket. Next, let's talk about the Greeks: delta, gamma, theta, and vega. These factors play a crucial role in options pricing and can significantly impact your trading decisions. Ignoring them is a recipe for disaster. Finally, the battle between emotions and rationality is a constant struggle for traders. It's essential to keep a level head, follow your trading plan, and not let fear or greed dictate your decisions. Learning from failures is part of the journey to becoming a successful options trader. Outro. As we wrap up our discussion on options trading mistakes, remember that even seasoned traders make errors. It's how you learn and grow from them that matters. Stay informed, stay disciplined, and always be willing to adapt your strategies. What mistakes have you encountered in options trading, and how did you overcome them? Share your experiences in the comments below and keep the conversation going. Thank you for watching.